And there's been some switching amongst Solana, AVAX, Luna, that kind of stuff. But the space isn't growing because of this issue with...
In this interview, Raoul Pal talked about how a lethal combination of high interest rates and recession has impacted the crypto market. Fear is gripping the cryptocurrency markets, and Bitcoin has lost more than half of its value in the previous 6 months. He touched upon the fact that if we see a jump in equities, we may see a spike in liquidations, and that will be the market's last capitulation. He then talked about his hypotheses for the duration of this bear market, and most importantly, the catalysts that will reverse this trend and ignite the next crypto rally. Basically, he talked about how we are locked in a mass liquidation phase and the potential bottom for Bitcoin. He then moved on to inflation rates, its long-term effects on Bitcoin, and then he also talked about NFTs, ETH, and some other altcoins. If you want to hear Raoul's comments on the crypto market, watch this video till the end, and don't forget to press the like button. Also, subscribe to our channel for daily updates. We post twice every single day. Now, let's look at his interview.
So the market narrative for the last year has been inflation. Inflation with some elements of growth. That narrative is now changing as people realize growth is about to disappear from the economy. And we've started to see the weakening in things like the ISM survey and many forward-looking indicators. I've just done a huge piece on Real Vision about this, about the forward growth is slowing dramatically. So we get this market, this position for inflation and an okay economy. Suddenly, you take economic growth and all positions start looking troublesome. So whether you're long commodities or you're long equities or you're long technology, everything gets blown up at the same time because the markets really struggle when you change the regime within the markets itself. I think the regime is shifting eventually to inflation disappearing and growth going down, so a more deflationary environment. So what that means is the financial markets already have tightened instead of the Fed. The rate of change of 2-year interest rates has been the fastest on record, and that tends to lead to a slowdown in the economy as those rate rises kick in. So therefore, the Fed are unlikely to raise rates as far and as fast as people expect. My guess is they probably stop raising rates sometime in the summer, and that will be it. So, and because the economy is going to be slowing down and inflation is going to be slowing down, that is exactly the environment that crypto likes. Crypto likes a slower growth, the Fed looking to on hold or maybe on ease. That's exactly what happened in 2018 at the crypto low. And we've got a very similar setup now. So we should, going forward, see a situation where as the Fed narrative changes and the markets start picking it up, we'll see bonds rally, crypto rally, maybe some of the technology stocks rally. So that's the phase I'm looking for from maybe the summer, but we've got to get from here to the summer first. And that's when this issue of positions being liquidated can go on. We're seeing the dollar go up a lot very fast. That unstabilizes markets as well. The equity markets can't find a footing. They've probably got another, if we follow 2018, they've probably got another 10% lower to come. That last phase, what I think it is going to be a last phase, tends to bring all assets with it. You know, gold is getting hit today. Cryptos can't, find traction.
Basically, you're saying that until the Fed is not going to decrease interest rates, we cannot expect the Bitcoin market to recover and to continue on a upward direction.
Exactly right. I think we need to see the fear of inflation dying somewhat. And, the bond market will probably give us our signal. Once the yields start rolling over and not going up every day, they're still going up every day. But once that changes, the narrative changes in markets, then I think the narrative will change for crypto as well. So I think the macro needs to shift. So we can use bond yields, probably our indicator, or maybe oil, if oil breaks down. Until that changes, crypto's not going to have a chance to really sustain a rally. Then we start coming into, okay, there's a bunch of people who are trying to get the Bitcoin ETF approval coming through again in May. maybe one of those gets it. I don't think that's not enough to spark the market, because you can buy Bitcoin if you want, and it's just not been going up. So, but that just helps at the margin. Then I think the ETH merge, when that comes late summer, I think that's going to help too, because that creates a different dynamic and creates very interesting yield strategies for institutions. So I think those things together are pretty meaningful. Because if you think about it, one of the reasons crypto's not gone up is the fact that, and the networks are relatively slow, they've not grown in a while. It's because retail investors' income has not gone up as much as prices. So they've lost discretionary income. So therefore people can only dollar cost average less, can get less involved. So what we're seeing is activity within ETH, for example, where people are trading NFTs and that money stays within the ETH economy. And there's been some switching amongst Solana, AVAX, Luna, that kind of stuff. But the space isn't growing because of this issue with wages and inflation. So that dynamic needs to shift somewhat. When crypto rallies, you tend to get these kind of, 300 to 500% rallies in the bull legs. So, that's 150,000 in the next rally, let's say, if it goes up 5x. And then it corrects a bit, and then it goes up again. It doesn't take long for the performance to compound. So, whether it's 3 years or 7 years makes no real difference to any of us. The point being is the long-term logarithmic trend of Bitcoin remains in place. And that trend will play out and how it plays out. But over time, we know where it's going. I just think it's less relevant as more players have come into the space. So it doesn't become the predominant driver, but one of the drivers. And as we talked about, macro is a big driver in the space that it never was before, because there are different participants in the market. The different participants, the institutional investors and the hedge fund investors, have also changed somewhat the structure of the markets. So that depends when they have availability of capital and they don't have availability of capital. So there's the market, as it broadens out in its ownership and participants, changes structure over time. But the key structure has always been the logarithmic network adoption model, which is Metcalfe's law. That is the key structure of markets. Whether there's a cyclicality based on the halving cycle or not, it's kind of largely irrelevant. What we're trying to say is, over time, adoption is everything.
Yeah, for sure. The network effect is what actually brings value to these technologies.
Yeah, and also I've done a lot of work on, okay, what are the predominant drivers of network effects? And I found that two variables explained most of price. They are the number of active addresses, but more importantly, the value transacted on the chain. So Bitcoin is valued more than Ethereum for two factors. There's slightly more wallets in Bitcoin, active wallets, but Ethereum's catching up very fast. And there is the value exchanged in Bitcoin is higher. So, for example, we're seeing Terra Luna buying Bitcoin, big size. We see MicroStrategy's big size. These size of transactions mean that the value of the network, if you've got big transactions and a lot of people doing them, makes it more valuable. ETH has a lot more transactions than Bitcoin, but they're smaller in value. So the total value being exchanged on ETH is actually less than Bitcoin, even though the number of participants is I don't know whether it's higher now or not, but either way, it's that value transacted that's the key part of valuing the network itself. The internet, when it had 5 million users, and crypto, when it has 5 million users, put them on the same chart, and then looked what happened from then onwards. So we're at year 6. Crypto has been outperforming the internet. It's growing at twice the speed. So this is the fastest growing adoption of all technology, which I say all the time to people. So it's exploding faster. So we get to like somewhere between 1.5 and 4 billion users in another 5 years from here. The internet never grew at this pace. So this is much faster than the internet. So then in answer to your question, what does it take? Time. Just takes time. We know that everybody is building in the space. Everybody is creating asset products for people to invest in. People are working on wallets. People are working on DeFi. People are working on social tokens. People are working on NFTs. People are working on all sorts of projects which will broaden out into a wider audience. The integration into the Web 2 world, another super important thing that's not there yet, but it will come. So it's all happening, and it's happening faster than anything we've ever seen before. So people just need to chill out a bit.